In the previous chapter, we talked about customers and sales, all the money coming in for the services that we provide. And when we're billing out to our customers and we're collecting that money, it's all the money that's coming in, all of the revenue, all the sales that we're generating. So now in this chapter, we're going to talk about vendors and expenses, which is all the money going out, all the bills that we are paying. So there's a couple different ways that we can navigate these expenses. So the first is over here in the apps. If you go to expenses and bills, and then you can see this expense transactions. So if you click on there, you can see this new transaction up in the top right. So you can click that down, and here you can enter your bill, expense, check, purchase order, credits. So this is one way to do it. The other way is going to be up here in this plus create, and there's this vendors column. And so this has a lot of those same options: expense, check, bills, credits. And so it's really whichever you prefer. I always like this option up here. It's a little bit quicker, but it's just a matter of preference. They both take you to the exact same spot. So this is how you're going to enter all of your vendors related transactions, vendors being those who you purchase from. So looking at this, let's see. If we look, so here's an expense. So an expense is just when we go to enter a bill that we paid as the expense was incurred. So if we paid with cash or a credit card or a check, if we already paid for it, we can just enter the expense right here through this option. A check we talked about in chapter 4 when we're writing checks and just doing that straight from the bank account. So that's another payment type that we can enter through this vendors column. A bill is if we receive a bill, a utility bill, or like here in the accounting firm, we send out bills at the end of the month to clients for services that we provide. And so when you receive a bill, then you can enter that bill here. And so what this will do is it'll record the expense, but then it'll set it up as a payable. It's not taking the funds out of cash or it's not booking it to the credit card. It's just recognizing the expense and that you still have to pay this. And so some companies will wait until the end of the week to pay whatever bills came in. Some will cut checks every day, however the company runs. So that's what this is. It's when you receive that paper bill, that invoice for what you owe, you can enter that bill here and it'll go to accounts payable. So to tack onto that is this pay bills. So when you have bills entered, you can go into here, see what bills are due, which ones are outstanding, and you can select which bills you want to pay. So that's what this is here. Purchase order is used to track product orders from vendors. And then there's these two credits. So a vendor credit and a credit card credit are pretty similar. So a vendor credit is when a vendor gives a refund or reduces the bill that they sent you. So you can enter that here and it'll reduce the amount that's owed in your bill. And similar to that is a credit card credit, where if you make a return on a credit card, then it'll reduce the amount that's owed on that credit card, but it's not coming out of cash. It's not a payment. It's just a reduction of what's owed. So, and typically the other side of that is going to be the reduction of the expense. And that's going to be in both of these credits, because you spent less on the expenses. If it's a expense that really never happened, you bought some supplies, but then you went and returned it, well, then you didn't really buy those supplies. You don't owe it. So that'll be a credit. If you put it on a credit card, and then you'll enter that as a credit card credit, reduce supplies, and then reduce the amount that's owed on the credit card. So these are all different types of transactions that are related to the vendors, and ways that we can record some of our expenses.